Hey, I'm David Berson, the Chief U.S. Economist at Cumberland Advisors. Peter, tell our audience who you are and who you work for.
I'm Peter Boockvar. I'm the Chief Investment Officer with Bleakley Financial Group, which is a wealth management firm. And I write daily something called the Book Report on Substack.
We're going to talk today about gold and Peter's views on gold, where it is, where it's going, is it a good investment, in what forms. So let's start. What's happening with gold today?
So I think in order to understand it today, let's take a quick 25-year view back. Gold started to become an asset class again after being sort of lost in the 80s and 90s with the stock market bull market. Then central banks started to experiment with very low interest rates in the early 2000s with Greenspan, and all of a sudden gold's bear market ended, its bull market began as it became a competitive asset relative to interest rates. Then fast forward, central banks experimented with zero and negative interest rates and QE, and all of a sudden gold became a bigger part of the conversation. Then you throw in Bitcoin. Bitcoin became part of the conversation as well, but the thesis behind Bitcoin was very similar to gold. Let's own a finite asset that can't be printed by central banks, and it becomes a unique asset class. So fast forward to today, where you have the price of gold at a record high as we speak. The last leg of this bull market in gold was the US and EU that decided to freeze half of Russia's central bank reserves. All of a sudden, you had all these foreign central banks that owned a lot of dollar-denominated, European-denominated assets, and they said, hey, wait a second. If they can do that to Russia, what happens if they don't like something that we do? Maybe it's time to diversify our reserve base, and what better reserve to own that's not denominated in some fiat currency? Gold. So central banks have been enormous buyers of gold. That has been the tailwind on this recent rally last couple of years in the face of a very sharp rise in real rates, which is typically negative for gold.
Right.
And now you have the potential tailwind of Fed easing, maybe some dollar weakness that then gives gold another leg higher. And the last missing piece that can send gold to the eventual 3,000 plus is the Western buyer through ETFs. They've been persistent sellers since 2022 because they have found interest-bearing bonds more attractive than the non-interest-bearing gold asset doesn't pay you anything. I do think at some point we're going to get that Western buyer back, and that could be sort of the fuel for the next or maybe last leg of this gold bull market in the next year or two.
So you sound pretty bullish on gold in the near term. Give us a 12-month price, or at least a change where it is today. But what do you think about gold as a long-term investment?
So the beauty about gold is, out of all assets out there, it's got the longest sort of history. 5,000 years, you've been through a lot. You've been through wars, you've been through famines, you've been through this, you've been through that. And it's still a monetary asset. Not just a monetary asset, it's also become an investment asset. And
so
for
it's
whatever
a store
reason,
of wealth.
It has proven to be a store of wealth.
Yeah.
If you had one gold coin in 1970 that you used to buy your gasoline, today, if you had that same gold coin, you can buy a lot more gallons of gasoline. So it is preserved your wealth relative to a dollar back then, relative to the purchasing power of a dollar today. Now, in terms of where it can go, it's always very difficult to try to value this thing. So I just look at a bunch of different things, and we got a wide range of potential outcomes here. One is if you inflation adjust the price of gold for the 1980 spike peak of 850, you get to about a 3,200-ish price of gold, if you inflation adjust that. If you compare the price of gold and where it should be relative to the amount of tons that are out there and the size of central bank reserves and how big they've gotten over the past couple of years, you can talk maybe $5,000 to $10,000. You can also compare, sort of the price of gold relative to the level of interest rates. I mean, there are a variety of different metrics. I don't think one is necessarily the right way, because we don't really know. It's not a cash flowing asset that you can do sort of a normal DCF calculation on. So I just would say 3 to 10,000. You can drive a truck through that range, right. But we don't, what happens if gold goes into a parabolic move like it did in the 70s? It couldn't go into the 5 figures. I will probably be out by then. I'll probably be selling once it gets into the 3s out of my position. Maybe hold a little bit if it gets to 5. But one last thing, in the 70s, in terms of where it can go, the bull market was about 7 times. Now, it was price fixed to $35 for a while, so that wasn't necessarily the real price, but it ended up going from 35 to 850. So call that, almost 7 times, or about, give or take. Well, gold bottom at 250. So, gold can go to 5,000 ish, maybe.
So last question. You mentioned before Bitcoin and similar currencies.
I meant 20 times back
20
then.
times, okay.
20 times, not
Right.
7. Yes.
But you mentioned Bitcoin and similar currencies. If that becomes more popular, because it sounds as if it's a competitor to gold, does that take the bloom off of gold or not?
So it's a great question, and something that everyone's trying to juggle with is, if I have the choice of owning one or the other, do I choose one? Or I believe that Bitcoin can complement gold. And the thing about Bitcoin is, and I appreciate and respect what it has become, but at the end of the day, it's only got a 15-year track record relative to gold having 5,000 years. Bitcoin has, to this point, has proven to be more of a correlated asset with the NASDAQ, more so than the price of gold. So I still think that Bitcoin, in terms of getting to where gold is and how it's perceived in the world and how it's used in the world, it still has to prove itself. But it can get there. I don't want to discount it. Has it taken a lot of attention away from gold over the last couple of years? For sure. But I think now that gold is sort of getting its own legs and proving its own worth in terms of central banks buying gold, they're not buying Bitcoin as their reserves. But it will be an interesting dynamic of how that sort of meshes in with sort of the global reserve assets that are out there.
Peter Boockvar, thank you so much. And thank you all for watching us today from Camp Kotok here in Maine.